So just like any other broker, stockbroker that is, you can borrow money, which is basically called margin. And you want to be careful when you're using margin, especially when it comes to the type of market environment that we're in, having wars with Iran and whatever the case. So you always want to be careful with using margin. So for this example here, I have about $2,000 that I could withdraw in cash, but margin available is $4,000. So it's like basically double of what I have to deposit. So it's kind of like buying a house, right? When you buy a house, you're putting down a certain amount of money and the bank is letting you borrow the rest. Same thing. I'm putting a certain amount of money down and the broker is letting me borrow the rest. So that means like I can have $4,000. I have eight. They give me another four. I have eight. And then not only that, like I don't necessarily have to buy into these positions at 100%. I could buy into like, you know, 50% of what it's worth and so on and so forth. So this is something you want to learn along the way when you're in this investing journey because eventually we want the account to grow. We want the account to grow. And once we get to certain levels in the account, we start unlocking other stuff. So, hi, my name is Ali Mavis, and I'm here to talk to you guys as far as my investing journey. I've been investing in the stock market. Well, at least doing this video for you guys. I've been doing this since November 13th, 2025. I've been investing in stock market well over 13 years now. And what I've learned during my journey is starting out small and having consistent habits is better than starting out fast and not having great habits. So, what I've been doing every single week is buying fractional shares for a dollar, sometimes a little bit more. So I have a set of shares that I'm investing in, and I'm just buying into the shares a dollar at a time, regardless of where the price is, what's going on. I'm just buying. And it's a thing called average cost. And I'm using my average cost to determine whether or not what I should buy, how much I should buy, all these things without, doing so much research on the company, without doing so much of the analytics, technical analysis, all that fun jazz. So first and foremost, what I like to do is either buy stocks on red days or I like to buy stocks that I'm still negative or my average cost is higher than the price. So right now we're at 671. I think SPY can go down a little bit more, but we're still gonna buy. We're gonna buy a dollar's worth. See what that happens. It's gonna bring down my average cost, which it did, which is lovely. Um, Next one here we have lows. We're gonna get some lows. We're only down 8 points. Normally, I would be like doubling up. I'd probably buy like $2 worth. But the conditions that we're in right now, the market could go down really quick. So I just want to be patient. Again, I'm still in what? If I started November 13th, we're in March 17th. That's about like 5 months I've been doing this. So, and that's 5 months is a small scale when we're talking about the whole spectrum. So why rush trying to put a whole lot of money in when I can just you know wait it out and see what does a couple months have in store for us. So we just got some Microsoft, dropped our average cost down. What else you're gonna get? What else you're gonna get today? Microsoft, Google's up, silver. We're gonna get some silver. And I have some other plays that I want to talk to you guys about, which stay until the end of this video and we'll go over that play. We have we have um, Gold, gold. Yeah, get some gold here. Oh, no, actually, we're not getting some gold. Yeah, probably get some copper. Yeah, add some copper. And we're all set. So now let's talk about the plays. So I made a play today. I made two plays today. I sold out of my covered call, my original covered call on Intel. So I made profit on it. So I got it for 305 and I sold out for 119. So I made about what, $186, 100 and change. So I got it for 305 and I bought it back for 119. So I made, what was it, 81, 200, 86, 186. So I made 186. And then I got into another covered call for the following week. And I got this for $535. So remember, I just sold this last one and I made $186. So if we take our 46.67, 46.67 minus 1.86, my new average cost would be 44.81. Now, 44.81, I took the next week 40, strike price 40, with an average credit of $5.35. So that brings my exit price, if I sell out of this, $45.35. $45.35 minus $44.81 leaves me with a $54 profit. So this cover call strategy is very great because even when you're losing per se, it can mitigate risk. It can lower your risk. It can lower the amount that you lose. So if at the end of expiration next week, Intel is above $40, I will make $54 out of this whole entire play because I'm going to lose in a sense, right? Like I'm gonna lose. It's gonna say like $600 or whatever, but I'm gonna gain it all right back, right? So, um, like like I made the money. I made the 100. It brought me back down. So, it bringing my average cost to help me get out of the position. So even though I made that $180, it just brought my average cost down. So now it's easier for me to escape the position, to get out of the position. I can get out the position at 44, whatever it was, versus 46. And then if this is above $45 at the end of expiration, or if it's above $40 at the end of expiration, I'm up. And if it's not, cool, I get the credit, I get a lot of credit, and then we just keep going on with the wheel. The next strategy is hymns. Like I mentioned prior yesterday's video. If you haven't watched yesterday's video, go ahead and watch yesterday's video. This is an example why the cover call strategy doesn't always work with stocks that are not like name brand or that hasn't been out for a very long time. You want to do these with stocks that are reputable and has a very long track history. Like this stock just recently came out. So you always want to do it with stocks with very good track history so you're not getting stuck trying to like chase premiums. So I got stuck chasing this. Basically here I have 125 shares. I have the 25 shares um, because if this has a little run or whatever, I can send this. Or I can have the extra 25 and I can like continue the bull run. But if not, like if it goes down, I could just cut out 21 shares. But basically, with this, my average cost 24.91. Here, I have the 23 strike price, but my average credit was $1.90. $1.90 plus 23 is 24.90. So if this is above $23 at the end of expiration, I would lose $7. I would lose, no, not even. I'll lose $1. I'll lose $1. I'll lose $1. Yeah, I'll only lose $1. So let's say again, right now I'm losing, right? I'm losing 56. And let's say it continue goes down, let's say it goes $24. I would still be losing. But because I have somewhat this, I like to call like an even insurance covered call. It's like insurance. I would only lose $1 from the play because I got a credit for selling my 100 shares. So I like using these strategies because again, it mitigates loss. Like I feel like if you're a trader, you want to get into trading stocks, I feel like it's a little bit better than like prop firms. Like if you're into prop firms, I think stocks is better because so with stocks you can trade futures. Stocks, at least you're holding on to something. You can't necessarily get stomped out. So I like this because with stocks and you have the right balance and you have the right tools, I can mitigate my losses within that same trade versus like trading like futures or other forex. It's kind of hard to balance out or hedge your position. So I'll leave you guys with that. Thank you guys for watching. Today's Tuesday, so we have the rest of the week with each other. Um, this week has been a little bit funky with all what's going on, but that doesn't mean anything. And that's the point of investing is it doesn't matter what's going on. You just got to continue the recipe and continue what's going on. And yeah, I also have these plays up here, but we're gonna go over these plays tomorrow. Um, I got things called credit spreads, but I'm gonna go over them with you tomorrow. And yeah, ladies and gentlemen, thank you guys for watching. If you guys aren't already following me on my social medias, go ahead and follow me on TikTok and Instagram at Strictly Financial. Ladies and gentlemen, leave any comments, questions down below in the comment section, and we'll talk soon.